What if I told you it was completely possible to live off of $100,000 a year in retirement and pay zero in taxes? Sounds too good to be true, but this is backed by our CPAs at Nations First Financial. Let's dive into it step by step. Hey everybody, I'm Daniel Ronberg, and I'm committed to helping people transition into retirement with an abundant mindset. Now, paying $0 in federal income tax in retirement sounds way too good to be true. And when something sounds way good to be true, it probably is. But in this case, it's entirely possible. In today's video, I'm gonna walk you through how one of our clients was able to retire with $100,000 free from paying federal income tax. Now you might be thinking, Daniel, you're just gonna tell us to put our money into a Roth IRA or a life insurance policy during our pre-retirement years so we can take out the income tax-free in retirement. But that's not where this is going. For most people, it's too late for that kind of savings. And even if it weren't, that doesn't mean that it's the smartest move for them. Instead, I'm gonna show you a real client case study and how they were able to build a significant amount of income in retirement completely tax-free. Let's start with a comparison. Let's say Bob and Sue earned $100,000 a year pre-retirement. How much income tax would they pay on that income? Well, let's keep it simple. Let's assume they have no other source of income. No interest income, no IRA distributions, no dividends, and that they're both W-2 wage-earning employees. Now, based on the updated 2025 standard deduction, a married couple filing jointly can have a standard deduction of $31,500 per year. That leaves them with about $68,500 of taxable income. That means at the federal level alone, they'd pay approximately $7,660 in federal income tax. And then when you account for FICA tax, that's an additional $7,650 for a combined percentage of approximately 15% of their income. So that's their situation while working. Now let's flip it and take a look at their situation in retirement. Bob and Sue are now retired. Bob receives $3,200 a month from Social Security, and Sue receives $2,000 a month for a combined household benefit of $5,200 per month, or $62,400 per year. They also have $500,000 in a joint brokerage account, and we're gonna assume the cost basis there is about $250,000. Cost basis being the non-taxable portion, or their contributions to that account. They have $650,000 in IRAs and $150,000 in Roth. That's a total of $1.3 million across all their accounts. Now, when they first came to us, they assumed there was no way they weren't gonna pay taxes in retirement. But in retirement, you can create your own situation by deciding on which accounts you're gonna take your income from. Here's how we help create $100,000 of tax-free income for them. Step one, we start with the Social Security income of $62,400 per year. At this stage, that's all they live on, and none of that is taxable. Because their provisional income is less than $31,500, the entire Social Security benefit is not taxable. So that puts us at $62,500 per year with no tax. Step two is to look at the dividends from their taxable brokerage account. Their $500,000 portfolio yields 2% a year in qualified dividends, which comes out to about $10,000 a year. Their $500,000 portfolio yields 2%. Which comes out to $10,000 of qualified dividends each year. When we add in their Social Security, their income is now $72,400 per year. Now, some of the Social Security becomes taxable because of provisional income rules. But going back to the standard deduction, their taxable income is still 0%. So at this point, Bob and Sue still have $72,400 a year without paying any taxes at all. Step three is we mix in the IRA withdrawals. We now add in $11,600 a year from their IRA withdrawals, making their total annual income $84,000 a year. Now, more of their Social Security benefit becomes taxable, but they're still under the threshold where capital gains and qualified dividends create income tax. So their federal tax liability remains zero at $84,000 a year. Now, step four is they still need about $16,000 per year to reach their annual income goal of $100,000. Now, if they took that money from their IRA, that would push them into a taxable bracket. So instead, they're gonna take the money from their joint brokerage account. Now, their cost basis is 50%, which means for every $2 they withdraw, $1 is gain and $1 is principal. So when they withdraw that $16,000, only $8,000 is counted at capital gains. But again, they're under the capital gains tax threshold which means their taxable income remains zero. So let's put it all together. They get $62,400 a year from Social Security, $10,000 a year from qualified dividends, $11,600 from their traditional IRA, and $16,000 from their brokerage account. This totals $100,000 a year, all while paying zero federal income tax. So even with $1.3 million in assets and income from multiple sources, Bob and Sue still own nothing in terms of federal income tax because of how their income is set up. But here's the important part. While it's great to pay zero taxes this year, for most people the goal is to reduce and minimize lifetime taxable liability. This is when it's important to get your CPA or tax advisor involved, because here's what they discuss next. The first thing is tax gain harvesting. Since they're under the 12% capital gains rate, they're actually able to withdraw more money from that brokerage account and then put it into something else. And since they still have a substantial amount in pre-tax accounts in their traditional IRA, the next thing is Roth conversions. Because they still have a significant amount in their traditional IRAs, this is where they explore doing Roth conversions before their RMD kicks in to make sure they don't end up paying higher taxes later on. The big takeaway here is it's absolutely possible to pay zero federal income tax in retirement. But more importantly, we should focus on how to reduce taxes across your entire retirement, not just for 1 year at a time. Finally, there are 3 major tax mistakes that retirees are making that prevent them from doing this effectively. In the next video, we'll walk you through those mistakes and how you can make sure to avoid them. I'm Daniel Ronberg, and if you'd like to see how we help clients make the most of their money in retirement, visit us at nationsfirstfin.com. Hey everyone, if you enjoyed this video and you want more information about retirement, be sure to check out my new book, Buy Back Your Life, How to Stop Worrying About Money and Start Living in Retirement. If you want a copy of this book absolutely for free, call my office with this phone number below. Talk to the girls at the front desk. You don't have to provide any information. We just need your name and address and they'll mail you out your copy today.